Hey everyone, welcome back to the channel. Today we're going to talk about something super important if you live in India, and especially if you're a business owner, a student of commerce, or even just a curious citizen. We're diving into GST, Goods and Services Tax. Now, don't worry, I know the word tax can sound boring or complicated, but I promise to explain everything in a simple and practical way. By the end of this video, you'll understand what GST is, why it was introduced, how it actually works, and what benefits or challenges it brings. So first of all, what exactly is GST? GST stands for Goods and Services Tax. It's a type of tax that you and I pay whenever we buy goods or services, like when you buy a t-shirt or pay for a haircut. Before GST, India had a really complicated tax system. Different taxes were charged by the central government and the state governments, like VAT, service tax, excise duty, octroi, entry tax. The list goes on. So GST was introduced as a single, unified tax to replace all of that. Now, instead of multiple taxes, we have one tax structure across the country. History of GST. Now let's take a quick look at the history. Before 2017, every state had its own tax rules. For example, if a product was manufactured in Gujarat and sold in Maharashtra, it would attract central excise first, then VAT in Maharashtra, and maybe octroi in Mumbai. So there was a lot of tax on tax, which is called the cascading effect. This made it harder to do business across states, and prices went up for customers too. To solve this, the Indian government introduced GST, and it finally came into effect on 1st July 2017. That's why we celebrate GST Day on 1st July every year. Let's break down how GST is structured. There are three main parts of GST. 1. CGST, Central GST, which goes to the central government. 2. SGST, State GST, which goes to the state government. 3. IGST, Integrated GST, which is used when goods or services move from one state to another. Let me give you an example. Let's say you're buying a fan in Delhi, and the fan is manufactured in Delhi. That's an intra-state sale, so the tax is split as CGST plus SGST. But if you're buying that fan in Delhi and it's coming from Maharashtra, that's an interstate sale. In that case, only IGST is charged, and it goes to the central government, which then distributes it between the states. Pretty neat, right? GST rates. So how much GST do we pay? Well, GST follows a slab system. That means different goods and services are taxed at different rates. Here are the main slabs. 0 cent. No tax. This is for essential items like milk, fresh fruits and vegetables. 5% for items like packed food, footwear and 1,000. 12% for processed food, smartphones and some household items. 18%. This is the most common rate. It covers things like ACs, restaurants, electronic items. 28% for luxury goods and sin goods like cars, tobacco or aerated drinks. There's also something called a cess, which is an extra tax on things like cigarettes or SUVs to discourage their usage or to fund public health. GST registration. Now let's talk about who needs to register for GST. If you're running a business and your annual turnover is more than 20 lakh or 10 lakh in special category states like the Northeast, then you must register under GST. Also, if you're an e-commerce seller or a casual taxable person like someone doing temporary sales, you need to register too. Once registered, you'll get a GST-in, a 15-digit number that identifies your business for tax purposes. This number is super important for filing returns and issuing invoices. Let's say your business is registered. What do you have to do next? You need to file GST returns, which means reporting your sales, purchases, and tax paid. There are different forms like GSTR1 to report outward sales, GSTR3B, a monthly summary, and GSTR9, the annual return. Small businesses can now file quarterly returns under a scheme called QRMP. But if you delay or forget to file, there are late fees and penalties, so it's important to stay compliant. Input Tax Credit, ITC. One of the best features of GST is the Input Tax Credit, or ITC. Let's say you run a business and you buy raw materials by paying GST. Later, you sell the final product and collect GST from your customer. Now, you can deduct the GST you already paid on purchases from the GST you collected on sales, and only pay the difference. This avoids the old problem of tax on tax and makes the system much more fair and transparent for businesses. Alright, so what are the actual benefits of GST? First, it created a one nation, one tax system, a huge improvement over the earlier chaos. Second, it reduced the cascading effect, meaning less tax burden on final consumers. Third, it simplified doing business across states. Fourth, it brought more transparency and reduced corruption. And lastly, it encouraged formalization of the economy, bringing more businesses into the tax net. Challenges of GST. But it's not all smooth sailing. There are some challenges too. Many small businesses find the filing process complicated. Frequent changes in rules confuse people. The GST portal sometimes has technical issues. And for informal sector businesses, it has created pressure to become formal and digital, which is a big shift. GST's impact so far. Since its launch in 2017, GST has made a big impact. Tax collections have become more stable. The government is now collecting over 1.5 lakh crore per month consistently. Compliance has improved. More people are filing returns on time. And overall, it has helped in making India's economy more organized and digitally driven. Latest updates, 1 min. Before we end, here are some quick recent updates. E-invoicing is now mandatory for businesses above a certain turnover. Small taxpayers can file quarterly under QRMP. The government is also planning to set up GST appellate tribunals to handle disputes faster. And GST rates are being constantly reviewed to simplify the system even more. But overall, GST is one of the biggest reforms India has ever seen. If you found this explanation helpful, don't forget to like the video, share it with friends, and subscribe for more simple breakdowns of complex topics.